Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hold on, I've been having some trouble with my lights here this morning, and I just barely got that fixed. Now we'll get the music on. Yeah, turn that up a little bit. All right, guys. Well, Thanksgiving week. I would stay on your toes here because we often see really weird and unexpected things happen going into the Thanksgiving holiday. So let's just come over here to the charts and look at the situation. Well, ZN once again a little bit lower overnight and starting the morning out on the upturn. Although so far for the first 10 minutes of it going here, it hasn't been too much. Treasury kind of subtly hinting that it is Monday. Oh, S&P 500 on the upturn a little bit, but mostly unchanged overnight. Oil just got hammered on Friday. Just absolutely destroyed. Gold and silver also hit pretty hard. Although, you know, they're still looking good. They're still looking like just a pullback so far. Hopefully things work out for gold and silver. Hey, copper, not looking so hot. Copper not looking so hot. And we come over to the dollar. The dollar higher again, all the way up at 107, and Bitcoin slightly lower, breaching the 16K level once again. And I should warn you, there are some pretty dramatic rumors out in the cryptocurrency market today. Now, when you get rumors like this, it's not a guarantee that anything is going to happen. So, you know, I can't say that this is a reliable indicator of anything. But usually when we have something really, really nasty happen in Bitcoin, you do get rumors beforehand. So what I'm seeing right now is kind of similar to what happened before Mt. Gox, right? So we'll see if anything happens in the cryptocurrency world today or not. I'll just kind of be keeping an eye on it over here. But meanwhile, here for the open, I am not too... I mean, we are on the upturn, so I suppose I could try and take a long here in the treasury, but it looks a little bit too quiet for it. It's so far it's not suggesting to me that there's going to be a ton of business. And good morning, mission. Let us come and check out Twitter. Hey, look, Twitter, it's still there. It's still working. Remember, everybody was like, oh, Twitter's not going to make it through the weekend because they fired all the engineers? Well, it's still going. Just saying. It seemed to be, he was talking about the Paul Graham warning in the cryptocurrencies. These types of predictions are often self-fulfilling by publicly telling millions to sell because of an upcoming drop. He is helping trigger a drop. Prices are non-linear to volatility. Yeah. Should we move to Mastodon? Probably not. You know what? Like, Mastodon is an interesting project and everything, but it doesn't really replace Twitter. Yeah, what's happening is all of the open source people are like, oh, here's our chance. But the reality is that Mastodon is kind of more like Facebook, with the ability for everybody to run their own Facebook and connect them together. So if you're looking for something that is like, you know, where all of the biggest names are to get breaking news and so forth, Twitter's still the place. And maybe you move over to Gab or Truth Social, or what was the other one? The one that was made by the Republican strategists. I forget. But anyways, there's like 3 of those right-wing ones. I don't think that those will take either. I don't think that Twitter's going away. You know, I'm always really reluctant to like go out on a limb and make like a big prediction. Okay, so I just want to put it out there that I don't really know what's going on at Twitter. Okay, but what I do know is that the layoffs that they had at Twitter brings Twitter basically back to the number of employees that they had a year before they went public. So just keep in mind that Twitter has existed at one point in the future with this large of a workforce, and they survived. Okay. And ultimately the thing comes down to, you know what's, man, I tell you what, for like the most trivial things over on Mastodon, I don't know, I haven't heard anything about it other than when people were like, oh yeah, let's go there, and then they came. So like there was one news outlet that were like, well, we're really concerned about Twitter, and we're leaving the platform for out of an abundance of caution, and then they were back before the weekend. It was like, okay. But here's the thing, it's crazy. The number of people that they want Twitter to fail is really what it comes down to. Is they don't like that Elon Musk is on it. They don't like that his whole aim is to make Twitter a free speech platform again, and they want him to fail. And it's funny, the number of software engineers out there that are basically calling themselves out in an attempt to try and convince everybody that Twitter's gonna go kaput, right? Like, maybe you don't document your code properly. Maybe you don't write readable code. Maybe your operations systems are in a complete mess all the time and require constant running around like your head is on fire to fix things and keep the website up. But that doesn't mean that it's like that in every place in the industry. And the real question is, did the engineers at Twitter do a good job or not? And if they did a good job, then somebody else should be able to come in and pick up the pieces, you know, and continue the website going. And they didn't lose everybody. Hopefully they still have like the key people. Of course, that doesn't mean that it's going to be easy. It's going to be super, super hard. And especially because I tell you what, the thing that's going to suffer with all this stuff in Twitter is going to be their data pipelines. Okay, the data pipelines are the ones that, the data pipeline is the thing that like the industry hasn't really quite figured out, and typically tends to require a lot of babysitting and stuff. It's the one that always screws up, because you'll get data into it that's bad somehow. You'd think that's not the case because you control the whole pipeline, but that's just what tends to happen, right? So, you know, that's a problem, because that's what a lot of advertisers are paying for. You know, that's where the money is in the data analytics. So Twitter's going to be in a rough spot in terms of revenue for a long time. But I personally am extremely skeptical of this whole idea that within the next week or before the end of the year that Twitter is going to be gone. I think it's still going to be there. I mean, Elon put rockets in, well, but did he really, like? So here's the other side of this. There are some pro Elon Musk people out there. I was looking for a better word for people, but we're just gonna call them people now. That seem to think that Elon Musk is like some level 99 wizard now or something. No. It's not gonna overcome the fundamental problems of the business, right? So they've got a rough road ahead of them. It's not insurmountable, but it's gonna be difficult. Oh, I was writing a tweet here and I didn't finish it. I tell you what, though, if Twitter did go kaput one day, like if it was just all of a sudden stopped loading, you know, that would be a problem for the markets. There are a lot of robots. I've come to learn that there are still a lot of robots out there reading Twitter and trading based on that. So I think that a lot of people would be kind of in a tough spot if Twitter just died. It's become a very essential part of the internet and of the trading world in particular. Well, not seeing too much on Twitter. All that said, not seeing too much interesting on Twitter here. This morning, the treasuries are turning back down here. I'm trying to think of like, do I want to go long or short here? I think I would probably prefer the upside here. So maybe now is not a bad time to get in, but because it's a Monday and I'm not expecting anything directly today, I think I'm going to hold out, but I do want to be on the lookout for a possible trade. I think that I would need to start to see like really strong, obvious order flow. But, you know, we had a pretty big options expiration last Friday, which, man, I said that if it doesn't go through, then I'm just going to have to look stupid, right? Well, I guess I look stupid because it did not. So the buy flows did come in towards the end of the session, but it was all sell the morning first, and so they basically just recovered the downside. So it did not work out the way that I expected it to at all. But just know that now that like the options expiration is over, you often see wild things in the indexes on the Monday afterwards, right? Like we've seen many times where it just goes down and down and down into the options expiration, and then the next Monday they have to cover and it goes back up, right? And vice versa. But that's definitely going to be a player today once the equity market opens. How that affects us in the treasuries, I'm not sure. I do see Luke in Discord reminding us that it's auction day. What do we get? 2-year notes today. No real like news to drive us. So that's basically what we've got to work with. So with all that said, on this last little move down that we had here, there was a little bit of selling in the 30-year, but not in the other two. Not in the 10 or the 5. So I think that I'm not really getting a whole lot of any kind of I mean, maybe if you want to go on the downside, but for us to go long, we're not getting any kind of confirming evidence right now. Oh geez, I failed my first event contract last Friday. It said it was going to close below 970, and it closed 971. That's funny, man. So Zero Hedge over the weekend, they posted a video, or not a video, good grief. I actually think that they do have videos. So, no, they posted an article that was summarizing research from, I think it was JP Morgan, that basically went into why are 0 days to expiration options getting so popular right now. And apparently, it's not retail traders. Apparently, it's all of these short-term hedgers have been having problems in other areas of the market. The edge of net has basically been wiped out, and so they're using the 0 days to expiration options to create the leverage and the opportunities for them to find mispricings. And so overall, apparently, the people that are buying them do make money, but it's like 3 times more expensive than your regular options. So what that means for the event contracts and on the CME, who knows? But they're pretty similar setup, right? Options that are basically expire that day. Friend sent that to you. I thought it was a good read. Well, after that downside, we moved to the upside and we saw some buying in the 10-year behind it. I only sell options. It does kind of make you wonder on that one, doesn't it? That like apparently there is some edge to buying those particular options. At least there's more edge in buying those particular options than there are in traditional options. From just the sats that we've had, at least. This doesn't mean that it's going to continue to be that way. Yeah. But selling them probably still has like a favorable win rate sort of a thing. You know, you win most of the time. When you lose, you lose a little bit bigger. Something like that. Well, I didn't see the volume come into the 5-year, but the 5-year definitely moved more there on that move. And we are seeing a little bit of downside in the dollar and a little bit of a rise in the 6-day. So I think that this movement that we're having is mostly related to dollar flows. We could take a trade based purely off of dollar flows, but not really sure. Option seller traders are among the smartest types of traders. Well, yeah. But on the 0 days to expiration. So basically my understanding is, so think about the way that the contract works, right? So if you're selling, right, you have a whole month for it to like drop around and do nothing. Well, if the more data that you have, assuming that nothing happens, right? Assuming that a piece of information that dramatically reprices the stock or the index comes in, that gives more time for the noise to come in and take hold, right? So more samples means more likely to come out at your average, right? So if you're selling options on a monthly time basis, right, that is like extremely likely to pay out. Whereas if it's just that one day, there's going to be a lot more randomness involved in it, right? The chances that it does or doesn't is going to be a little bit more. So I think that perhaps could explain why buyers of 0 days to expiration overall are winning. But I wouldn't necessarily expect that to play out, you know, to stay that way. It could change as it becomes more popular. I don't know. But the thing that got to me was how expensive they were. So basically, I think that like these event contracts are being promoted in some way as a, you know, like an easier, cheaper way for you to try and play options, right? And I think that the data kind of suggests that isn't the place to play it. That if you're trading a super tiny account, that those commissions and everything are just going to eat you alive. Yeah. 0 days to expiration are pretty much pure roll of gamma into delta. There you go. At every price movement of the underlying, given that we have a smile on the volatility curve, by definition has kinks, they are capitalizing on that. It just magnifies the overpricing, underpricing of the IVs versus the realized, so buying makes sense. There you go. I mean, surely you could probably make money from selling it. It's just, you're going to have the same, similar, probably not as dramatic, but a similar risk profile to people selling longer term options. But it kind of seems like the way that the instrument is structured, that it, for us, listen, for what we do, you definitely would want to be buying, right? You would definitely want to be, oh, I know something that the S&P 500 is going to move the S&P 500 that the market's not pricing in, and so I want to buy them. Well, they gave us the opportunity there at 3.82. You would have made $10 on it. I'm still not seeing enough here to, so one of the things is that in the 10-year, we had that buying that pushed us up, and then they sold almost all of it back and then came back to break even. So it seems to me that while it is moving in the treasuries, it's not being driven by strong order flow. It probably was. I'm going to bet that it was currency flows that at least created that initial move. Do we know how much margin in tick is the Dow? You're just talking about the E-mini Dow? I don't know off of the top of my head. My recollection is that it's quite a bit. It's relatively, it's not as bad as ZNQ, but it's a little bit more than ES. S&P 500 on the downturn a little bit too. I feel like so yesterday, I think I forgot to take my medication. And so like I took it later in the day, and then because I was starting to feel a little weird, I was like, oh, I must have forgotten to take my medication. And then yeah, it just didn't go away, and I kind of feel like this sleepiness. I don't know if that could be like a second order effect, like comes off and then it comes back on, and then you'll get the tiredness a little bit. But because like I slept pretty heavy last night, and now I'm sitting here, and when I breathe in heavy, I still kind of have that feeling. So that might mean I might be a little sluggish today. 1 tick equals 1.9 Dow Jones being $1. There you go. So for that, you're talking about something that can move like, well, on an average day, it'd be like 100, right? Perfect state for trading ZN if you're sleepy. we probably could have pulled ticks out of this, although I don't know. Let's do it. Let's do it. We'll do it with the sim, and I'm not sure that I feel confident about 12. So I'll try and sit on the edge of the range. This kind of looks like they're going to move without me though, huh? I could probably do a stop limit here. I think I would need my limit to be a much lower though, like 120 or something. Oh, did it just go? Yes, it did. Too late. Well, I'll put one there then. Hum. That fairly aggressive taking there. So if I had already been in a position, seeing that would maybe make me feel a little bit more confident and likely to want to try and hold it. But since I did not get a good price, I think that I have to be a little bit weary about trying to buy into that. Seems to me like there could be a flow out there looking to buy, but they're still trying to be sneaky. So hopefully, if we want to buy, hopefully it is going to come back a little bit. Try ZQ, Winsley. Well, it's not so much that like I'm going to sit here and fall asleep. It's like I just don't think that I'm going to be like as sharp, you know? Like I'm not going to be as engaged or sharp. So like if I do end up taking a trade, I think I have to keep that in mind. Like I'm going to have to try and focus extra hard on getting a good exit, right? Man, it's not even slowing down at all. If we had taken that original spot that we had pointed out, I would have been really happy. I'm kind of regretting not taking it now. I mean, I had reasons to not take it, but thing is that we have some reasons to think that maybe we'll see some movement today, right? I have some reasons to think that maybe we'll have some movement. It's just that the action up until then was not bearing that out. Now I would say with that push higher, there was definitely some order flows behind it, right? There is a big order sitting there at 14.5, 15. So we'll see what happens there. I think that if we did get a stop through that, that might be interesting. So I'll leave an order there. At least one order there canceled. Yeah, which one is ZQ? Is exact Akshay showing us that he was the true professional and knows far more than any of us, probably all of us combined. Tell you what, I'm gonna go upstairs, go to sleep. Akshay can come and take over the stream. Oh, is it the federal funds rate? Oh, okay. Okay. I was thinking in my head something yesterday about the federal funds rate, and I forget what it was. Oh, I'm sure that you probably could get it. It might be one of those things that if you open it up in NinjaTrader, it doesn't show up, and you put the instrument in and it does, and then you try and trade it and it tells you no. And then you have to contact them to give you access. I've certainly had that happen on an instrument or two. It is literally older than ZB and ZN. Really? Well, now there's a little bit of pressure trying to hit them into that new highs. I feel like this is a situation where they shouldn't need that kind of coercion, though. Maybe he just really wants to buy it, though. It's been able to trade back and forth there at 14 quite a bit, though. Even the euro dollar is older than those, and most brokers don't offer that by default. And yeah, exactly. I don't know why they don't just have everything that. Well, you know what I think it is like there's like all of these settings and stuff that they have on their side, right? And they don't always get it right. In fact, every time that I've seen a new contract introduced, my platforms have by default had it set up wrong. I guess in both of those instances that I'm thinking about, it was NinjaTrader. No. The first time it was CQG. Or no, not CQG. It was AMP. The first time it was AMP. It was AMP the first time, right? When ES was, do you remember that first day in ES? We had to email them to get access to micros. And then that first day on the micro 10-year, we had to email them. And there was things was set up wrong. But like, that's the thing that I think is kind of crazy about it, is like, if you went over to, if you were on NinjaTrader brokerage and you went over and decided that you wanted to trade federal funds futures, you may well actually be the first one asking to do it. Totally possible. Like, the retail traders absolutely crowd into the same set of instruments. I think it depends on how much deposit in your account to start with. Yeah, that might be too, but okay, so they did hit into that new price. Hey, I got an okay spot in the queue at least. Watch them leave me high and dry on this. Okay, we just need to get just enough for Seth to hit in with his sim order, and then we'll smash it down. No, I actually am a little bit worried about this sputtering out. I probably shouldn't be, but actually, I think I'm feeling a little bit better about this overall. I think that I will try and play this a little bit more. It's just sim here still, so I think for me to want to get involved with my micros over here, I need to see it come back a little bit. Okay. Oh, I'm going to try and average it out here, Lucas. Because I am concerned about it moving against me, but I don't think they will get much below like 12. So I can take a bunch of contracts, a bunch of fills here on as it comes back on me, right, and average into this. So I'm going to cancel this one because I don't want to take on more than 5. What I'm doing right here, I don't know if I would ever have the guts to do this with a live account, to be honest with you. Because, like, yeah, it works most of the time, but if it doesn't work, you're losing $1,000. Why are you not hedging the? So yeah, that could be because I don't have $1 million. I tell you what. if I had $1 million, I would totally just play the basis. What are you saying hedging them? Well, unless you're saying like, no. You could take a spread, but if I'm going to hedge this, I probably need to own the actual treasuries, right? And to do that, you know, that basic, like if I'm going to do 5 of these, I would need like $5 million to hedge it, right? But if I had $5 million, I would totally be, well, I'd have to have more than $5 million because I wouldn't want to risk my whole fortune, right? But if I was a billionaire, you know, I would totally love to just sit here and just try and trade the basis difference between the cash and the future. That'd be fun. Well, who said that's the only way to hedge? What would be a cheaper way to hedge it? Suppose you could try hedging between the yields in this, but that would be probably would be difficult to get the numbers to line up right. So what is my theoretical risk on this one trade? It looks like, let's just say for the sake of argument, that it's 625 here. It's 625. So for me to do it in micros, I would have to be like, now that would come back to here. I would have to take 60 contracts. And then there'd still be 25 left, you know? You get what I'm saying? Like, well, it would be hedged pretty close, but the other issue with the hedging it is that if I'm going to hedge it, then that means that what I'm getting off of the bid and ask and everything matters a lot, right? 625. If it went below 112.10. Well, but then that's a spread trade, right? So my issue with the spread trade here is that I don't have any reason to think that the spread is going to go a direction or not. And I'm not very good at predicting the spread. It seems to me that there's some opportunity in spreads and that people do make trades based on them, but I have never been able to figure that out. I've read all of these books about analyzing and interpreting the yield curve, but I've never been able to find something that gets me to the point of like, this is where this is the direction the spread is going to go. This is how much the spread is going to go, and yeah. Spreads are primarily a hedge. Well, I don't know. I don't really see it that way. Is it wrong for me to not see it that way? I feel like that basically it comes down to there's a risk somewhere, right? In order to make money, you have to take on risk. Almost, okay? Always, okay? Now there are some things that are much less risk, okay? But if you're already at like, I want to trade minimum risk, then the question comes back to which risk do you want to be exposed to, right? And I'm saying I would much rather be exposed to the risk of the basis than I would exposed to the risk of the spread, because every time that I've tried doing it on the spread, it doesn't work out for me. You get what I mean? Then short is TN at that precise level, and that way you're covered. There you go. I could do that. But at that point, why not just puke the contract? Right? I guess at that point, it allows me to stay in it without losing money. I guess. But, you know, you can always choose to get back in, like. Basis between derivatives and cash is still spread. Yeah, oh, okay. But I'm just saying you're exposing yourself to the risk of that one spread, right? So with the basis, how does it come out? Well, with the basis, basically what it means is if something crazy happened here, like say something really bad happened and the treasuries just bought up like crazy. Treasuries just bought up like crazy. Then I would be underwater on that basis trade, essentially, and hoping that it comes back down, right? Because the basis trade basically ends up being, if you can hold it till expiration, you probably make money. But do you run out of margin before that happens, right? Theoretically, you can get back in, but in practice, we know that's not how it works. Okay, but in practice, you know that when you're going to hedge yourself on the downside, that it doesn't necessarily just end up being perfect either, right? To be frank, here with the treasuries and me having a thousand lots to puke into if I have to is probably I'm gonna be okay, right? So like if we were doing NQ, it would totally make sense, right? Because in NQ, you never get the price you want. But I think at that point, the point that I was trying to make is that if you're going to be doing that, the exact price that you get ends up kind of mattering, right? Like in order for you to have an edge, you're going to have to be getting good fills on limit orders, probably, right? Because if you pay up for those in a spread, and what I've noticed in a spread is like one side of the spread, wait for them to fill you on the limit order, and then you can immediately hit into the other side with your market order, and that's like the safest way to do it. If you can get the limit order on both sides, though, it's way easier. Pick your poison. Do that, Seth. Fund to 230. No thanks. The larger thing here is like, okay, you have to make money, you have to take on risk, right? Okay, the less risk you take on, the less available money there is in it, generally speaking. And I'm doing this with pretty minimal risk, okay? But there's a couple of things that I could if I had an infinitely sized account and I wanted to take on the same amount of risk, there's a couple of other ways that I could do it, right? So then how do you pick which one? Well, then I think it comes down to, at that point, which risk do you want to expose yourself to? And what I'm saying is just that I understand and am able to predict what the outrights are going to do way better than I can predict what the basis or what the yield curve is going to do, right? So for me right now, it makes more sense to just come in and play the outrights, right? I'm sure that there is some edge out there that we could add that would give us a better edge in on those other risks. I've been searching and I haven't really been able to find it yet. Yeah, because especially with these micros, spread trade makes a lot of sense, right? I could just come in and I could just trade 2s and 10s, for instance. Could just outright trade 2s and 10s, make the difference off of that. Would have been some really good trades in that this year, right? But I haven't been able to call the times and places of the moves in the spreads. So if you have any ideas on some research that I could look at that could help me there, I would really appreciate it, because I would really like to learn more about that. I think the ability to come in here and just outright trade the yield curve with minimal risk here, you know, basically risking a tick per change in the spread, per 1/10 basis point change in the spread is $1, right? So you're not risking very much. You don't have to do any fancy math because they're all sized the same. I think there's some really cool things about that. If we had an edge on what is the spread going to do. Well, so far, it's a decently sized pullback in the 10-year, in the full size, but we're still getting this thing where in the micros, it's like it comes back and you only get like 5 ticks out of it and you're frustrated. Okay, actually, I'll do it. Keep an Excel sheet with theoretical values of the implied yields on the treasuries, using both the cheapest to deliver and the on the runs. You will notice something after 6 months. Well, if we use the cheapest to deliver and on the runs, I already know what's going to happen on that, right? Or I think I should know, because then you're going to see that basis trade where they always come in at the end of the contract, right? But if I just kept track of the yields here on these ones, or more to the point, I can come in here and I can chart the difference between the 2 and 10, right? 6 months. Okay. I'm trying to think of a way to get the data to actually like just straight up do that, right? Without having to keep track of it for 6 months. if we're talking about just the yield curve itself, we can chart that right now, right? Ah, that worked out. I maybe should have. Well, no, I think I'm okay with taking them off at 14.5. I guess I could have had, you know, only done 2 there. I do think if they give that to me, I will take another one and try and pull out another tick. So when I'm doing something like this, my objective would be to try and get my average position below 12, but yeah. If I meant the yield curve, I would say the yield curve. Well, then you're not. So I think that we probably would learn something really interesting there. Oh yeah, what's going on with oil? Dude, that's down another $1.50. The oil traders seem to be pretty confident that there's going to be a recession here. That's what I think is going on with oil. If only the treasuries were as so confident. Okay, so the whole issue here actually is like the basis trade that we're talking about. You'd need a big wad to do it, right? So if we learn something that still requires a big wad to work out, then I'm not. Ah, I got fills on the upside. And there's a new high. And there was some really strong covering there, I think. Saudis and other OPEC members are considering increasing production by up to 500 barrels per day, according to sources, the Wall Street Journal. Why would they do that? Oh, I mean, that's true, but the exercise is simply for learning what I said. Yeah. Let me try and approach this a different way, actually, because I get what I really, it is useful information for sure. But the thing that I think would be the most interesting and useful to us and the audience would be, any kind of statistical information we could glean about the actual spreads themselves, like the 2s and 10s and the 10 and 30s. There's definitely something there, but I can't figure it out. There's definitely something there, but I haven't been able to figure it out on my own. Asian premium is now gone. OPEC is likely to need more oil now to make the revenues up. China, India, and Japan are getting all their oil from Russia. That could be. Yeah, the edge that I'm getting out of this is like, wait, this is not enough. Wait, what just happened there? Well, I'm not 100% sure what I just did. Oh, I am hearing that now. So that could be a reason for us to buy treasuries. Although the question is how much. Why is showing 155 while 145 is 0? What do you mean by that? Oh, because my average position is higher than my break-even position. So 145 is 0 based on the profits that I've already made. Right, because I averaged in and took those quick profits on those, that makes my average position much lower. Although I think it might be screwed up because I only took 3 contracts off there and then I bought more at 18. So shouldn't I have had... Oh, you know what? No, I never sold. I don't know why. I don't know what happened. I should be 3 contracts. I want to be 3 contracts. Maybe they fill me there. Good. Now I'm 3 contracts. You see how my break even moved up? Come on. Hit me. Hit me. Come on. One contract. That doesn't help. Man, oil is just getting creamed. Now they're at 77 and a half. There we go. So basically what it's saying now is that in order for me to continue making money, it needs to come up above here because my average ends up being at 18. Now it does that as like last in, first out, so it's not completely accurate, but you can see that everything below this is less. That's because I'm losing money. Or rather, if I come back to this window right here, my closed P&L is 218 and my open P&L is only 3125, right? Why do you have it set up to last and first out? Because that's just the way Jigsaw does that. I don't think that you can change it. I don't think that there's an option for that. Well, man, they're not coming back, are they? And there was just another 20 points in that. See, there's no last in, first out or anything like that. Wish there was. I think there's a reason why the platforms do it that way, though. Like there might be you might be interested in seeing it done the other way, but like it just confuses people, and so they don't give you the option. 20.5. Well, the idea is supposed to be that I've already taken profits on all of the contracts that I've had down here. So now the contracts that I have from here are from 18. And I mean, it is kind of useful because what happened? I would have liked to have taken some more contracts down here, right? But they moved up. So, you know, I ended up playing the icebergs before she goes, essentially. And so that made my average position higher, right? Would have been better for it to come back and me taking them on down here. But how are you doing that? You're taking on more risk when you do it at that point, right? Rather than risking profits that you already made. Does it? I am looking at this now and being like, okay, definitely has to be oil that's moving the treasuries here, don't you think? I mean, this move, when we like turned up and like really pushed to new highs, that was when it started in oil. So now that we know that that's the driver, the question is, what kind of other flows could we see? Well, we've seen 10,000 contracts long. So I think that does give you enough room for there to be more. But where is the bottom in oil going to be? Is the bottom at 77? That's where they touched 77 in oil, right? If that's the bottom in oil, then it doesn't make sense to want to continue to go long here, right? Zero charge lets you change it. Well, there you go. I remember reading this thing where somebody was complaining about it, and somebody from a platform was explaining why they don't show it that way. Didn't the Biden administration say they wanted to refill the SPR at 70? Oh yeah, that is the price that they said, isn't it? But I don't know. Somebody that's into oil should probably be able to tell us, based on that cut, what should the price of oil go to? Because I'm looking at this and I'm like, 77, is that really it? Okay. At the same time, a 500K cut is just equal to, or sorry, raising at 500K is just what they had taken out before the election. So that sure feels like a slap to the face of Joe Biden, doesn't it? That they kept oil prices high just for the election. And then as soon as the election was over, it's like, okay, actually we need more money. We'll cut. Or sorry, we'll add production because we need to make more oil to make more money. Because the price isn't helping. But this is another, it's kind of funny, like the Biden administration loses either way, right? Because now what do you get now because of this? Well, you find out that the whole oil cap on prices for the Russians, right, doesn't help. Oh, I think that one is you can just go down through the math of it, right? You can use logic to prove something, right? It's just that usually what people think is logic and prove something doesn't actually prove the conclusion. Okay. So see that my objective is to get my break-even price below the last swing, if not below the low of the day. Well, there you have it. Now I can just let it run. Logic must be determined by an equally qualified internet force. I think a really big part of the issues that we're having around quote unquote science in our society right now is that the arguments are really over social sciences, right? Like very, very few people are coming out here and trying to argue about string theory or whatever it is in physics that they want to argue about, right? I mean, not that those arguments don't happen, but most people don't. Most people accept what the science, because they can get like actual, easily observed, noticeable results from it. It's like, oh, the rocket ship can now go, X times the speed of sound now. Yep, that means that the science that you did was legit, right? But when the study is like having something to do with people's gender identities or something like that, it's like, how do you prove that science was actually good? Correct, right? We're basically just taking the experts' word for it, and yet they have like statistics, but like some of those statistics are kind of faulty, or rather, we know that a lot of the statistics in the social sciences ends up being faulty, right? New Congress is going to reverse Brandon's energy policy? I don't know if they can really do anything about it. Listen, they can't even agree if the sum of natural numbers summed to infinity is -1/2 as Ramujan and Riemann or not. This. Yeah, the new Congress, I think that what the only real change that will come out of the new Congress is that the Republicans will investigate things. Doesn't matter who's in charge. The House of Representatives is always a zoo. But we'll see. You know what? Like, there's a real risk to this for the Republicans, if you really think about it. Because if the Republicans do all of their investigations and Hunter Biden doesn't end up in prison, or they don't turn up anything, then that's going to look awful for them, right? I don't know why Congress constantly pits themselves, against. You know what I mean? Like, you get in office and you get yourself into a position where it doesn't matter what you do, you can't actually change any policy. So then everything that you get judged on has to do with your oversight function, right? And then you spend it all on investigating supposed crimes. Then how good you look is entirely determined by whether or not those investigations turn up anything. And the reality is that we don't have any kind of smoking gun. Like, we have reasons to think that if we dig, we'd find something. But the general outcome of these things, more often than not, is that they don't find anything. Right? Why not pit yourself more as like, okay, we think that there is a problem with, I don't know if Kevin McCarthy would do this, but if I was the Speaker of the House, I would be like, I think that there is a problem with the lobbying industry. And so why don't we have a bunch of congressional hearings about lobbying, right? Like, we have all these congressional hearings about failures in policy, things that we know aren't working very well. Hearings on the border, that would be a big one. I bet they probably do that one, right? And then you get judged on that instead of whether or not Hunter Biden goes to prison, right? That's kind of the that's going to be the shit show that we get to watch in the House of Representatives for the next 2 years. But it'll be fun. It'll be fun, and I hope they do find something. We need a damn break. Well, but the Biden administration didn't really. That's the other thing, is that the only thing the Democrats were able to do was pass a stimulus bill, right? I'm less concerned about the Hunter thing as I am about the fact that the whole thing was shrugged off as a lie for the sake of saving Biden's candidacy. Yeah. Well, and I think at this point, that one's basically been proven, right? So the question that I would have on that one is, what is the headline that is necessary to make that what I would basically consider to be a fact now, float up to the top to where, people have to talk about it, right? Because basically what happened was some people said, oh yeah, like the FBI like intentionally suppressed it and we did what they wanted. And then, none of the news outlets covered it and nobody heard. But I think, am I wrong? Can somebody counter that? I think that it's pretty much a confirmed fact now that individuals at the FBI were behaving in a partisan manner to try and suppress information that would be disadvantageous to Joe Biden's campaign. It totally 100% happened. I wouldn't have cared if no one covered it. It would have been better than what actually happened. Oh, but I mean, like, we found that information out and it's just, nobody cared. Okay, well, oil is continuing its dive. So you know what is something that I think is kind of interesting? Can we get back to the markets a little bit? Because it's important for us to understand the politics, but unless we have something else that I think would really help people understand the world or what's coming up next, I don't know if it's much help in dwelling on that for too long. Something that I think has been interesting in this market is that like the only thing that's really been up has been oil companies, right? And they are going to get hammered by this. Like we're getting back to the price that it was pre-Ukraine, essentially. But so that basically means that everybody takes a loss this year. But does that provide a good opportunity for us to buy oil again? I wonder. I don't think that I would want to do it today, but the entire system coalesced into a singular direction for a single person. I feel like that makes it seem like there's way more involved in making that happen than there actually is. So all you had to do was have two guys from the FBI come out and say, hey, the Russians are trying to spread disinformation about this, and it's going to be about Hunter Biden or whatever. And then they tell all of the media, and the media does what they're told, and that's all you have to do. Isn't that kind of a little bit more terrifying? Is that one person in our government that doesn't, that decides to act in a partisan manner can have that much power and influence? Of course, that brings up a ton of questions about the system overall. It brings up question about how the people that are running the FBI are doing it. It begs questions about the overall structure of the FBI. But then it also begs a lot of questions about media, right? Because the basic gist of it is that the media is not performing in its the function. They're supposed to be telling us this stuff, and they're basically acting as propaganda arms instead. Right? It's like there's a bigger idea that I'm trying to present here that is, I think, a little bit more like the philosophy of Seth. So take it with a grain of salt. But basically what I'm saying is that the truth is often much simpler than our conspiratorial minds make it out to be. But that simple truth often ends up being even more terrifying and troublesome. Right? It's like think about that. Like it didn't require a big conspiracy from the global elites to come in and decide that we're going to make Joe Biden the president and stop Donald Trump, etc., etc. Instead, it only takes one or two people acting on their own to do all of that. How disturbing is that? That we've given people in our government that much power to abuse. Just saying. Just saying. Are we seeing? Oh, okay. I just saw a headline from Yahoo. Crypto prices tumble as fallout from FTX's collapse continues. But I haven't really seen anything out of Bitcoin since the drop on Sunday. Treasuries did pull back pretty hard here. They're kind of rising back up like maybe they want to take a new high. I'm a little bit skeptical of it. I'm not so sure that I can take 3.78 either as a good trade. It sucks because if we had taken that original trade, we could have made 40 bucks almost. Yeah, 40. We could have made 40 bucks. Of course, you're not going to get the very edges, so let's just say it was 20 to 30. But hey, We're not going to catch every headline, right? Yeah, there you go. That simple truth from The Big Short. A lot of shady stuff going down, fueled by stupidity, not maliciousness. Well, okay, but so you shouldn't have brought up The Big Short, because the thing that irks me about The Big Short is that they got it wrong. I mean, like everything that they show in that movie and everything, is generally correct and everything. It's just that the Big Short, basically, their conclusion is that the financial crisis was caused by a bunch of people doing stupid things, doing stupid, risky things, and not understanding what they were doing, and then it all gets exposed. When the real story of the 2008 crisis should have been that government policy created perverse incentives that encouraged people to do stupid things, right? And to be frank, the same thing is happening in crypto here, because government policy basically became, we're not going to police this and just kind of watch and see what happens. And then we printed a ton of money, and so all of the money went into the most speculative thing, which was Bitcoin, and then it all just like evaporated. Think about how much economic stimulus that could have actually gone into helping supply side actors, improve our supply chains so that our ability to import and produce things was greater. Like, think about how much stimulus they could have gone into that. Just got completely wasted because people threw it into Bitcoin, or like one person took it all from a PPP loan, that sort of a thing. Like when you start to add out the amount of money that went into all of these things, it's absolutely nuts. And how did it happen? Government policy. It's every single freaking time, right? This is what always happens here in the financial world, is that people on the left, sorry, I'm making a partisan thing. Look, I'm a right winger, okay? The left always wants to blame it on people are evil, those evil, greedy capitalists, when it almost always can be traced back to a government policy. When are they gonna hold the politicians responsible? Well, I've never seen a single instance here where they're like, oh, yeah, it was the politicians, they did this. That was a bad policy. No, nobody ever gets held to account. Even with this last election here, it's pretty, everybody knows. At this point, it's basically a foregone conclusion in the minds of the American public that the stimulus bill from Joe Biden created this inflation, or at least was a strong driver of it. And in addition to his oil policy, etc., 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 they still vote for him. Nobody ever holds the politician accountable. What's with that? Every single time. I guess it's just people's natural inclinations that they only think, okay, here's a policy, here's like the thing that I want to have happen, and then they don't want to think about it further than that. They don't want to think about, how does this affect the larger system? What are the second, third, fourth order effects of this policy? And since they're not interested enough to think that analysis through before the policy happens, they're not able to think it through when the effects of that policy are seen. It's frustrating as it's the most frustrating thing to me. But you know what? There's another side of this. I got to take this another way. Because I think the thing has been that we've been warning people about things like this, right? Like, there was people on the right saying that there were people in the FBI basically abusing their positions. Okay. There was people saying that Joe Biden's stimulus bill was a bad idea. Even people in the Democrat Party that were saying that, frankly, right? So it's not like there wasn't anybody saying anything, and we all heard them. I think anybody with a memory kind of remembers that happened. But what I keep seeing over and over is that they don't care. Like, I warned about what was going to happen with Bitcoin. I've been saying that this has been the case in Bitcoin since 2017, essentially, right? And is anybody like patting me on the back now? Oh yeah, Seth, you totally called it. We should listen to you in the future about Bitcoin because you clearly do understand what's going on. That indicator does actually give you a good idea of how much fluff is in the cryptocurrency market. Maybe we should subscribe to it. Nah, that's never going to happen. At this point, coming back and saying I told you so doesn't do anything. We have to move on. The move now is to build things. The move now is to build. We just have to move on with, accepting that people are going to screw up and aren't going to figure it out. But now is the time to start building things, right? So that next time we have a bull market, we're at the head of the pack because we stayed diligent through that time and we built something, right? That means now is the time for us to learn and to build our business and to build our community and our edge. What? Are you using US banks to wire money to Tether? Sorry, I don't understand the question. I'd have to watch that. I'm not 100% sure what's going on. Okay, so I'm glad that I took a contract off up there at 500, right? That was great. Should I just close this? Should I add? Well, what I'm seeing right here, right now, is that while we did buy 10,000 contracts in ZN, there's very little follow through after that. So I do believe that the order flow coming from the OPEC news was the primary driver here in the market. And who knows where oil actually goes to, but for now, we aren't getting more flows out of the treasuries from it. So I don't know if it makes a whole lot of sense to take any kind of a trade here. But basically this last contract, I went and made 120. I made 8 ticks on it basically and gave them all up. So let's just see. S&P 500 is running pretty good here, isn't it? Can they recover 39.70? What should we put for the title? Oil murdered by OPEC. Output hike. Put the Konami code as your title. I don't think that would help, actually. You know what would help is if you guys all click the like button. That would help a lot. And I appreciate it for those of you that do that. Yeah, they're sitting here like, Seth, hey, why don't you go short micro treasury yield futures? Water's warm. I promise. Here's the thing is if it's oil that's moving the market here, you know, and not some larger order that comes off of the gap, you know, the options expiration and all of that. I've got to be really careful about getting involved in the market here, because the initial move has already happened. So if I did get anything out here, I think they would just be scraps, right? Like, I feel like that this is where you just fight for scraps. So I'm okay with doing that with this last contract, but it's probably not a good idea for me to take a new position. The S&P 500 keeps rallying here, though, so they did touch 3970. You know what? I don't understand how anyone can scalp this. What, this kind of move right here? I could probably try and scalp. I don't think that I would actually get filled. It looks like the ZN is giving us the kind of action that we could probably find ticks. It looks like the 5-year wants to drag him a little lower here. Oh, you know what? There's a bunch of comments here from Larry Summers I should read. Options on interest rates imply significant risks of inflation or prolonged downturn in the US over the next several years. Odds are about even that 3 years from now, 1-year rates will be more than 5% or less than 2%. And the odds are more than a quarter that they will be more than 6 or less than 1. Low rates are more likely than high rates. I read this as a market regards a protracted period of weakness as a very possible, and seeing some risk of continuing above target inflation. I would not expect to see rates above 5% unless inflation is well above the 2% target, or rates below 2% unless the economy was quite weak. Markets are saying, given all the uncertainties, that they are very uncertain what the Federal Reserve will do. Forecasters should have humility, and the Federal Reserve should make clear its flexibility. We are very much in an environment of two-sided risk. Okay, so Larry is right, except for this part about the Federal Reserve should make clear its flexibility. Well, maybe they should, but they won't. So here's the problem. Anything that the Federal Reserve says that is dovish moves the market and eases financial conditions and makes it more likely for us to see increased inflation. So the Federal Reserve has to basically come out and speak very hawkishly every time that they speak, even if the next rate increase was likely to be their last one, right? They're not going to say anything non-hawkish until the point comes at which they have to switch. Still stuck at 17.5. Well, you know what? It's no coincidence that it comes back to my average position at 17.5, right? That's how the volume went. I was thinking about maybe if I could get fills at 17, but they didn't give any fills at 17, but they can certainly go up at 18. So I suppose I could have added at 17.5 and taken them off at 18. It's been here long enough now that I'm not sure I feel comfortable trying to play it. It has, let's see here. So since our thing came in at 720, we maybe want to keep an eye out in the next 30 minutes and see if we've got some sort of a follow-up move. So before we got into all of that, I was going to say I had seen some stuff here on Twitter. So here what somebody was saying, you can't do mass gun confiscation in America because it will lead to civil unrest. Don't care, do it. People on Twitter say the dumbest things, man. Like, you're all literally advocating and talking about armed conflict. Let's just not, okay? Did you see all those posts from Elon Musk overnight trying to coerce Donald Trump into tweeting something? I bet you, they unbanned him, but I bet you he's not going to actually use it. Or if he does use it, he's going to say, I'm still going to be posting on Truth Social, so go there. I bet you that's what he does. Trying to get that activity flowing. Yeah. Well, like I said, that they're going to be hurting for money over at Twitter, right? Although I'm also going to bet that Twitter activity is like at all-time highs right now, so I wish you could filter Twitter by mental aptitude. Well, listen, you can choose who you want to follow and you can sort them into your own kind of lists. You know, like if there's somebody that you follow because they're mostly stupid, just put them in your stupid people list. Right? Remember, these algorithms, what do they optimize for? They optimize for attention. Is it the best thing for you to have all of your attention completely focused on Twitter all of the time? No. So, what do? I'll tell you what you do. Don't rely on the algorithm to filter for you. Filter it yourself. Have some boring things. Have some boring things in your life. You know what I did this weekend? Oh my gosh. So I've been working on this table. We're going to replace this desk because the desk that I have right now is basically IKEA. It's basically a veneer over a honeycomb lattice. It's not a very solid desk, okay? So we found this piece of wood. I think it's birch. The ad said that it was cherry, but it's not cherry. It's probably birch. So we've been refinishing this table, and we've put a lot. I'm talking like several hours every weekend for like the last 6 weekends or something like that. And now I've finally gotten to the point where we're just like sanding it down and making it smooth. And so I get in there. My uncle didn't need to help me to sand it, so I was just sanding it in the shop by myself with some drum and bass blasting loud. And sanding is like the most boring thing, right? Like I'll go and I'll put like pencil marks on it and then sand the pencil marks off of it, and that's how I know that I've sanded it down enough. But it's boring. And you know what? It felt so good. To be doing something so mundane and be enjoying it and not feeling any need like I'm bored, I need some other kind of stimulation here or any of that. just doing this basic thing and occupying yourself. It was so therapeutic compared to subjecting myself to the TikTok algorithm, you know. These days TikTok is becoming less and less interesting to me because all of a sudden, like just in the last month, it feels like it's like now it's nothing but thirst traps. Like I don't get very much solid information. Something changed in the algorithm. I thought that it was going to move more towards informational content, and it hasn't. It hasn't, for whatever the world. So I get on TikTok. It's just like, I mean, I still like to get on it, but when I'm doing it, I'm constantly thinking, you know, I'm not getting anything from this. You know what else I've been enjoying doing? I have been really enjoying studying this Series 65 exam. So there's 8 practice tests and then 2 like green light tests. So you're supposed to do the 8 practice tests, then do a green light test, and then do the 8 practice tests again, but this time without seeing the answers as you're answering them. So I've been going through and doing that. On Friday I did 2. Probably could have done 4 to 6 this weekend, but you know, I didn't. I decided to try and get my wife to do some things, and she did, and I think that she was happier for it. So and I watched the baby. But reading and doing these, I find it engaging because I really want to remember. Like to me it's not just like we got to pass this test, right? To me it's like, well, we've got to be everything that's in here. I've got to know it from memory for the rest of my life. Is the way that I've been thinking about it. And I really want to remember all this stuff. And so I find it fun. I find it really fun. And that's nice. I mean, it's a lot of mental energy. Like you do one of those tests 2-3 hours. It's like, it's exhausting. Why don't you put all of the information into Anki? Wait, what is Anki? I do not know what you mean. Well, I tell you what, we had another little come down here in the treasury, and it's getting pretty extreme, isn't it? I don't think that trying to fade that move was ever on my mind, but you certainly could have done it and made it a ton. Oh, is it that memory flash app? I might at some point. So the way that it works is like at the end of the test, then you can see all of the questions, and you can add them to like a list to review later. So I do that, and I'm trying to go back and find like all of the memorizable things. Like there's a lot of how much money, you know, like you can only put $2,000 into a Coverdell account per year, for instance. Those are the sorts of things that you got to remember. They also have flashcards, but the flashcards were only available for a limited time and expired midway through October. So I went and did the flashcards as much as I could, but wish that I had gotten more out of that part of it. But I can basically make my own cards at some point after that, yeah. So I think what I'm going to do is I'm going to go through all of the 8 tests and make my list off of those questions. There's a scientific curve called the forgetting curve. I do think that like if I don't do anything during the whole week, because the issue is I don't really have 3 hours during the week where I feel like I can take Adderall and then take the test, because I feel like that's what I got to do to really be able to really do well on it, because it's all about avoiding these mistakes, man. It's a really devious test, I gotta tell you. So, you know, I need to be studying during the week, and I haven't been as much, and then you forget it. So see how this one worked out? I said if it got below, what did I say? If it got below 110, I would puke it. Well, I probably should already be out, huh? I'll put an order out there to get out, because at 14 is where I should have gone to. But I think the thing is actually is that, you know, I can schedule the test for whenever I want, and I think that I want to do it sometime in December. So we're supposed to be, I think after Thanksgiving, they wanted us to do some sort of a certification. It was actually for Terraform. They wanted us to do the Terraform certification, which I know that app pretty well, but not from like an academic standpoint. So I can just cram for a week and then take the test, right? So I think that I want to do it sometime after that, right? So towards the end of the month, or maybe January. I guess I could do it in January. And like the thing that worried me was, oh, by the time I've gone through and finally gotten this one, there's no way that I'm going to want to go in and do the Series 3 test, which was like really the real point of this. Like this one was supposed to be like a testing grounds. And really it's too much work for it to be a testing grounds. I should have just gone straight to the Series 3. But I'm still excited to do the Series 3. So yeah, long story short, you've got to manage the information yourself. This is so you can manage others' money, right? Or did you say that was the thing you didn't want to do? No. So it's so that you can be an investment advisor. So basically, if you are an investment advisor representative, as part of an investment advisor is like the organization. So like, if you are trading for a bank, that's a broker dealer and you're an agent of the bank, right? So that's the execution side of it. So if I was executing stuff for other people, then that's where you would need the Series 7 and the broker dealer license and to do the broker dealer things, which is a lot more involved. Okay. The investment advisor is you can give investment advice specific to that person, right? So I can come in here and I can say, you know, if you're not matching out your employer's 401k match, then you're just leaving money on the table. And everybody, I think, should try and max that out at the very least, because otherwise you're throwing money away, essentially, right? And the 401k is the best way to go for your retirement. Okay, that could be me like giving general advice to the public, right? But for me to come in and say, okay, well, you're 55 and you've got 10 years left to retire, so we need to start, you know, maybe making catch-up contributions, and we might want to modify your portfolio so that if the market crashes here, you don't lose 50% of it all at once. These sorts of things, right? That's what an investment advisor can do. What if you're not going to stay at the company that long? I'm not at any company. Currently watching Almost Helpful stream right now. So it's probably you kind of missed the good movement. I was able to take my trade off there at 14, wasn't I? Oh, what if you're not going to stay at the company that long? Side question. You should still be contributing to your 401k and still getting the match. And then when you go to your new company, they're going to have a 401k as well. And if you don't plan on staying at the company, well, so I can't give you a specific advice to you because I don't know what kind of company you're working for or what your exact situation is, right? But one thing that I think people should look out for is that sometimes there are additional fees attached to your account if you are no longer an employee. So it's usually a good idea unless you get really good. So for instance, me, I still have the account that I got when I worked for Goldman because it allows me to invest in things that I can't other places. Like gold, for instance. If I wanted exposure to precious metals, I can get it from there. I usually can't get that from a 401k, right? So generally speaking, you will just roll over your 401k into the new account. So you'll have to make note of where your 401k is at. And, there's a document that you have to go and get from the manager to switch it over, move your money over to the new place you're working. History repeats itself. I'm gonna wait for the next move. Well, so I'll tell you what happened though, Code Lounge, was we were coming in here, we saw a little bit of up movement, and we were thinking about going long, thinking that maybe some of the stuff relating to options expiration and so forth could maybe move us up a little bit, but we were very careful about it because it was Monday. And then this news headline came through that OPEC was considering doing an output cut, or sorry, an output increase. It was an output increase, wasn't it? And then the treasuries really, really took off. So I was too pansy to trade it with my live account, but we did average into a position and was able to play that move really effectively. So if you go and rewind, you can watch that and you get almost a perfect example of playing that kind of a move. And even then, I kept one contract on and held it all the way back to 112.14 just to show you that, and when you get something like that, what it does is it allows you to take on risk so that even if it comes all the way back, you don't lose anything. Super great. What you're doing is super risky, and I probably wouldn't do that on a live account. But there's a lot of things that you can learn about how that sort of a thing works, because the bigger traders, that's kind of what they have. That's kind of the game that they have to play. So you can always rewind and go and watch that. And now we're talking about investment advising. So the thing is that if I pass this test and everything, I could come in and start my own investing advisor. The thing that's holding me back is it costs money, and I don't know if I want to spend that much money to get it started. But then you could submit a form with some basic questions, and then I could give you specific investing advice, and we could do it live. Right? That would be cool. You should make a video about fundamental analysis that we do before opening of a market. Yeah, well, I think so. That's one of those things where I feel like that I do want to make a video about it, but I just not sure that I can make a good one yet. You usually need some sort of an interesting framework or some way to make it interesting for people to get engaged in it, right? But I am making a PDF that has some of that information in it, kind of the general gist of the components that we need to be watching, essentially, right? But I think that the bigger thing, if that's what you're interested in, Code Lounge, is you've got to read lots of news. Read CNBC, read the actual analysis posts on Zero Hedge. Ignore all of the stupid political stuff, but the actual Wall Street analysis posts on Zero Hedge, and look for things that they're talking about that could be possible predictors of order flow. Because what moves it today is probably not going to be what moves it tomorrow. Yeah, 99% of retail traders don't follow the news that's coming in. It's true. It's true. It really is true. The FT71 is a good example of what exactly? He does kind of go through the news. I mean, when I start my stream, I do mention any news that overnight that I knew about. Oh, the data visualization is good. Okay. Anyways, you gotta follow the news. So I'll give you one right now though that I would keep an eye on. Okay. When we have a holiday, sometimes you will see really strange and possibly strong trends before the holiday. So I don't think that that's what we got today. Yeah, S&P 500 is kind of tight right now, right? But we basically got tomorrow and Wednesday. And last time that this happened, it was the Wednesday. Like the Wednesday was just like this insane trend day for no apparent reason. So I would keep an eye on that. I wouldn't be looking, you know, if it seems like there's a trend breaking out on Wednesday, I wouldn't fade it. But we'll see what happens. I thought that today there'd be more movement in the S&P 500 than there has been because of options gamma. So now that might change after London closes. As I think that some of the selling has been coming from Europe. So keep on that. Slayer reposting, what are some basic news sources that we should follow to get a general idea of fixed income and equity markets to give us a good read on the markets besides CNBC? Okay, so yeah, Goldman. That's exactly what it is. So on Zero Hedge, and probably you want to be a subscriber to Zero Hedge, because a lot of these articles that they post are behind their paywall. But Zero Hedge will often post summaries of Wall Street analysis. So I give, for example, if I come over to Zero Hedge here, and I'll try and give you an example of the sorts of things that I don't care about versus that I do care about. Okay. So their top leading story is Italy 2-0 France, Meloni crushes Macron amid migrant crisis. So for politics, that's interesting. And to understand the politics of Europe, that might be interesting. But that's not going to be the first article that I'm going to read. Zero Hedge has it's, I guess at this point, a conservative, but really their bias is more anti-establishment. And so they're always pushing a certain kind of political line. And so you got to understand what that bias is. Okay. So like crypto is here to say billionaire Bill Ackman U-turns with several investors. I don't care. I don't care what Bill Ackman is doing. Neoliberal profiteering dressed up as altruism. So they're complaining about ESG investing. Don't care. Don't care. Okay. Key events this holiday shortened week. FOMC minutes, durable goods, and Fed speakers. Okay. That's actionable information, right? They're giving you a list of possible predictor of orders. So on Wednesday, there's FOMC minutes. Well, that could increase the possibility that we get a big move on Wednesday, right? Everybody's going to kind of hold out before the minutes, and then all of this volume is going to come out as people try and position themselves safely before the Thanksgiving week holiday, right? And then we're going to get durable goods, and then we get a bunch of other data. Actually, let's pull that up over here so we can see that. Forex Factory is where I usually go for my calendar this week. Okay, so Wednesday we get durable goods, flash services, consumer sentiment. So that's going to be a big day. Right. So those are all predictors of order flow. Those are things that we know right now that can potentially predict future flows, right? Now, the problem with this stuff is that that's all information that like has big uncertainties on it, right? Like we don't know what the core durable goods number is actually going to be. We might be able. Hold on, I'm just listening to News Squawk here. Okay, so the news that's coming over the newswire right now is that there is concerns that China will continue to be harsh on COVID and that they're seeing more cases. Okay, so anyways, I could come into this core durable goods and I might be able to try and create a model to try and predict this, because there's information. If you actually read about the report itself, then you might be able to think, okay, well, there might be some public sources of information that I might be able to use to try and help me predict what this number is going to be, and you could try and trade it off of that, okay? But that's kind of the issue with those ones. So then coming back here, so there they gave us a good one, right? Let's keep going. Zero hedge. Kanye West confirms 2024 president. Don't care, right? Disney, don't care. I mean, maybe if I own Disney stock, but I personally don't care. Okay, here we go. Morgan Stanley's 6 key views for Europe into. So if I come in and one of those has a bank's name in it, I'm gonna read it, right? Clash breaks out on Goldman's trading floor over what's next for stocks. Okay, so let's read this one. Now this one is like you have to have premium, but this was posted last night, so I think we're okay to read a little bit about it, right? So because I want to teach you something about here, okay? A bit of a clash of trading titans has erupted in the middle of Goldman's flow trading desk, which, unlike Goldman's always bumbling, confused, and wrong equity research desk, is actually quite good. Okay, so that's their own opinion, but they are telling you something kind of useful, right? Orders move markets. So if you want to predict the short-term direction of things, you really want to look at flows. So these guys that are sitting on Goldman's desk and are watching all of the flows come in from the hedge funds and so forth probably have the best insight into what are the things that could possibly predict future orders. So these guys, anything that you can get, and this information is not really supposed to get outside of the firm, but they post it internally and people will leak it, right? You want to read these. If you can read these, you want to read these. These are some of the best information, okay? Now, that doesn't mean that the research desk is useless, okay? It's just the research desk is giving you research on what? The fundamentals. The fundamentals is not the only thing that moves the markets, right? And that's why it seems like they're often wrong. But the research that you get from the Goldman Sachs in investment research is the best in the industry too, okay? Goldman and JP Morgan especially are the best ones on this, right? So what kind of information do they give us? Okay, tactical flow of funds, November 27th, in November, 27 days left to trade in 2022. Risk remains to the upside into year end. Okay, $2.1 trillion index expiration Friday. The demand for institutional puts hedges sets new records day after day. Put call ratio is super high. The 4,000 max long dealer gamma pin is removed Friday. Let's move. So what they're essentially saying is that because we were pinned on Friday from 4,000, now they're saying that now that the gamma is gone, if the market decides to move now, it will be able to actually move. Because last week it was super tight, right? Remember, there was many days, almost every day last week, except for like one in the S&P 500, where for the first hour of the S&P 500, it just chopped, right? Okay, so they're saying now we could actually get a move. I'm thinking that Wednesday FOMC meeting minutes and afterwards would be the thing that moves us to the next spot, whether it's up or down, right? And they're kind of saying that we're in a situation where we might be able to move a little bit more. Okay, corporate buybacks are still running double modeled pace ahead of a 1% tax change effective 12/31/22. Okay, so basically we're seeing more corporate buybacks than we usually would because they are trying to get as much of that done before a tax gets put on it. So what is that? That's bullish, right? Tax loss selling maybe reduces here given lower modeled realized capital gains. So this one, I probably should do some tax loss harvesting next month. I think I had one trade that I took that I think was a really dumb one, and I'm almost embarrassed to say it. I am embarrassed to say it, but I I tried to catch the knife on Zillow, and I think I should take the loss on it for my taxes. Okay. Global equities logged a massive 22 billion of inflow this week. Emerging theme out of digital tokens and into physical stock certificates. Okay. Required minimum distributions. Tax changes smooth out potential selling pressure to over months instead of jamming December. I'm in the process of updating my 2019 framework. Okay, so he's saying that not as much selling as usual because of this. Okay. 0 day to expiration, weaponized gamma, and 44% of options now 0 days to expiration. Okay. He's saying it's led by retail YOLO traders, but we actually have some data that suggests that it's not from retail traders. Okay. So that means we might see some expanded gamma, right? Investor vacation schedule and challenge stock bond liquidity. Okay. Global systemic equity and fixed income demand is front loaded for next week. Wow. Bonds equals in an up big tape. Well, we did see buying today. We didn't actually see this flow yet, though, did we? That was kind of the one that I've been watching for, right? Month-end pension fund equity selling is a non-event, fully funded, all good. USA equals 50. Okay, so normally you might see some end of month buying and selling, and they're basically saying that here for November, they don't really have a whole lot. So for us, I think what you're going to see, if I can get this to pop up here, okay, so we get these 3 days, and then we got Thursday and Friday. Friday market is open, but it never does anything on Black Friday, except for watch Black Friday sales, okay? And then you get these 3 days. So in the treasuries, you might see some interesting behavior because we'll be rolling over during that period, okay? In fact, I think... Oh, no. I think the 28th is when you roll over. Maybe it's the 23rd. We'll see. So you'll see some behavior there. But other than that, on the 30th, I would normally be looking for some rebalancing flows. And the Goldman desk is saying that it's already fully funded, so they won't have to move very much. Right? Does that make sense? So here's a post where they're basically the kind of analysis that you were just asking for, right? At least from like higher time frame things. It's all right there, right? You know all of that stuff, so keep those things in mind. Problem with this one is that they're kind of suggesting that it could either go up or down really hard, and the Goldman traders seem to disagree about which direction it's actually going to go, right? But then we can combine that with the breaking news, right? What's happening right now, and predict order flows, right? Perfect example. So yes. Long story short, the best place to get this information is from the banks, and just about the only place I know of that retail traders can gain access to that information is in fact Zero Hedge, which is why, listen, I know a lot of people, if you're left leaning, you really, really don't like Zero Hedge, right? And I'm very right wing, but I'm not really a conspiracy theory right winger. And I think that the financial system, there's a lot of great things about the financial system. So I disagree with them a lot, right? But they got the goods. They got the goods. So you got to go there. That's the best place to read it. Wall Street Jesus does a great job sharing Big Bang research for free on his Twitter. Oh, really? I've never heard of that one. Let's see here. Wall Street Jesus Twitter. Analysis on flows, sweepers, and positioning. CSL Steam Room. That sounds like more the one that we want. Put call, blah, 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 blah. This looks like more like individual. Okay, there's some good information. He's posted enough stuff in the past day that I'll follow him. In fact, I think I will add him. Right, so this is what you should do, is you should have your own lists. View lists. Oops, that's not what I wanted. That's his lists. I want to add 2 lists, and then I'll add him traders, right? Goes like crazy, I bet. Let's see this one. Auto. Oh, maybe you have to pay. Yeah. That's the paid version. Oh, okay. Anyways, yep. Anywhere you can get it, right? Because that's the thing is us retail traders. You know, that's our disadvantage. So you find it wherever you can. And people will kind of share ideas on Discord. It's another place to kind of get ideas. Okay, so where do we think about where we're at now? Well, oil continues to look sad. Come over here to the charts so you can see them. Oh, how did I do it? I thought it was like... I had something that would highlight where my mouse was. Oh, well. Okay, well, oil is just getting creamed. Oil is just getting creamed. And they just barely pushed new lows. Okay, S&P 500 seems to be similarly falling, although they didn't really start until quite a ways after they opened. So they're not being as driven by oil flows. We look at the dollar. The dollar is actually still fairly range bound, right? But one thing that we are seeing that we should make note of is that there was some selling in gold and silver. And I bet if we look at copper here, yep, copper also selling. So the metal's selling here. And when we look at our market analyzer, biggest winner today is natural gas, followed by the treasuries, and pretty much everything else is down. So it is your standard risk-off move today so far. Kind of a small, tepid one, but it is still a risk-off move. Well, I swear, because I do it all the time. So I have Power Toys. Don't I have this on? Yeah, Power Toys. If it'll open up here for me. There we go. Mouse utilities. Press left control twice. Okay, get rid of that. There we go. So now we can, does that help over here? I come and I say, oh. No, wait, it's not working. Now you can see it. Okay, here you go. Here is oil getting creams. Look at that. And then gold is also going along with it. Treasuries, maybe they're gonna bounce. Maybe we could go up higher, but this kind of looks like there was a counter move of some sort, and now this is like post meta order impact flattens out. So I don't know if that one is worth messing with. Oh, what's this one? Windows Alt P. Oh, maybe that's better. There you go. How about that one? Does that show you more clearly? Can you tell more clearly from looking at my screen which chart I'm talking about? Because you can see the big cursors, right? Here's the treasury. I like it. I wonder if I should enable the mouse highlighter. So if I do that, doesn't that? Oh, you can turn this one off as well. Windows Shift H. Oh, I don't like that at all. Let's see here. Appearance and behavior. Let's make that bright lime green. I wish that it would like Windows Shift H. Did I not do it? No. Windows Shift H. I can't get it to work. I'm clicking over here, but it's not. Oh, it's because I turned the opacity up. I was the wrong way. There you go. How's that? So now if I decided to click somewhere, I think I could do better. Yeah, the other one applied a dark mask to the screen. Yeah, that's what I didn't like about it as well. Oh, sorry, Javier, do you only trade bonds or everything? Well, I keep an eye on everything, but right now I'm only putting orders in the treasuries. Treasuries is my expertise. But like we follow the S&P 500 pretty closely, for instance. You tripping on the playlist today? This it has been. We've definitely been through the whole playlist before now. I mean, there's 210 tracks in it, but I feel like I've never heard this one before, and it's been hopping. Yeah, no problem. So is there any research that would suggest if it's a risk-off day, if you just go short on whatever instrument, you would have a profitable system? Well, listen, if you knew that it was going to be a risk-off day before it happened, then yeah, you probably could make serious bank doing that, right? I mean, come on. If you went short oil before all of this happened, you'd be up $5,000 on one contract. That's a $5,000 move in oil. Oh my gosh, I just bumped my microphone. Good grief. Okay. Problem is knowing that that's going to happen before it happens. Or when it happens, you know. So I don't know why. I think I didn't have my news squawk turned on correctly, because when that OPEC headline hit, I did not hear it. But you could have been listening on the news squawk and think about it. It moves, right? But let's come back to oil here, okay? The news headline comes out at like what? 7:15 or so, right? So even if you took 78, 79, let's say, could have gotten 79, right? You still made $3,000, right? Now, of course, there's some risk to it, right? Because it came back a good 25, so that's like $250 risk, but you could have held it. And then how long do you hold it for? Obviously it's harder than that, but yeah, I mean, the whole thing is if you find something that changes the day from being a risk on to being a risk on or a risk off because of a piece of news, those are going to be some of the strongest movers, right? You leave a like for Seth's mic clip being on fail army. Good grief. Man, Ethan, the baby, is very, very upset. I can hear him speaking. So this morning I woke up and come downstairs after showering and everything, and my wife and Asher are already up, like, downstairs, and she was not happy. So basically he decided, oh, it's time to be awake. I'm coming downstairs. I don't want to go to mom and dad's room. I'm just gonna come downstairs. He's figured it out. That's she's in for trouble now, because now that he's figured it out, he's gonna start waking up early, and she's not gonna like it. But maybe that's good for me, because that means that she'll start going to bed earlier, which will make it easier for me to go to bed earlier. So thinking back on that risk off, risk on sort of a thing. So there's really 4 ways of categorizing a market, right? So you can have risk on and risk off, and you really should be risk on, risk off, and not like up down, because different instruments will move different directions based on whether it's risk on or risk off, right? So you want to have that kind of a framework, okay? And then the other 2 is it going to be trending or is it going to be range bound, right? So risk on and risk off are both kind of like trending markets, and range bound is like the default, right? So if you can predict what kind of a market it's going to be in those kinds of situations, then yeah, you can do really, really well. Like then you can start to use technical analysis and get like really good trades. Because the issue always with technical analysis is that you don't know which way the trend's going to go, and you don't know if it's going to be mean reverting or trending, and that kind of determines whether or not that particular signal is going to work well. So if you can figure that stuff out ahead of time, and that's the issue, is figuring out ahead of time consistently. But news can sometimes tell you that before it happens even. So you threw me off with that technical analysis statement. So like, let's say that you are trading a moving average, right? A moving average is going to suck balls when it's a mean reverting market. But if we're having a trending up market, then all I have to do is only take the long trend entry signals for that moving average crossover, and you're going to kill it. You're going to kill it, or you're going to miss the entry, right? Problem again is knowing that we're going to be in a trending up market at the beginning when that crossover initially happens, right? And this is why technical analysis in the end doesn't work, is because the past market information doesn't predict very well whether or not we're going to be trending or mean reverting, or whether we're going to move up or down. But the news sometimes can. Get what I'm saying? Of course, if you can use order flow, it's even better. But, right? Like with order flow, for us, even though we didn't 100% understand what was going on, we were able to catch a really good trade. Kind of looks like they want to go back up to the highs, doesn't it? Where is the micros at? Well, 8.5. Okay. How far did they come back? Well, I know that they were at least at 3.8, but did we ever get 3.81? It would have been a good time. Darn you for making a lot of sense. You just explained the difference. Yeah. I'm glad that you caught that one. I'm trying to move on from constantly bashing technical analysis, because it doesn't really reach like the thing is for you guys that are here every day and really understand what we're doing. Bashing technical analysis is fun, if not maybe a little bit boring now, because you've heard it a billion times, right? But for the people that we're really trying to help, that are still caught in the throes of technical analysis, you know, sitting and bashing on it doesn't really help. So I try to avoid like outright bashing it directly, right? So I kind of take a roundabout way of undercutting it, kind of saying, well, you know, if you knew this, this, and this, but you don't know this, this, and this, unless the news can predict it. And so then at that point, why aren't you just trading the news, right? Yeah, the combination you just described sounds like a solid strategy. Yeah. The one thing I would say is like, So like, why not do that as compared to like what I do? Well, the moving average crossover is generally going to be late, right? We usually see the volume starting to come in or have some inkling that it's going to happen long before you see it on the moving average, because that's a lagging indicator. I have to say, this move back to 20, not really driven by that much flows. Maybe 5,000. 5,000 up. Basically, it's not taking a whole lot to move the treasury. Seems like the 30-year was a lot more indicative of where it's going to go. For whatever reason. Well, are we seeing the, what's the spread doing? So the spread steepened. Spread steepened. So back when we were talking about doing spreads, did any of you guys think that it was going to steepen? Maybe we should do a little experiment and come in at the beginning. Like, let's say we'll give it the first 30 minutes. Okay, every day we'll come in first 30 minutes and you guys can try and predict whether we will steepen or flatten. Yeah. More like key support resistance levels? Nah, I hate using those. Like, I totally get why people would be interested in levels, but it's everything that I've ever seen from that is that the more important a level is, the more useless it becomes for trading, because it just chops around that price. I hate it. Nah, I think that it's a much better to just watch the flows. Just watch the flows and know what you're expecting to see, and then if you start to see a degree of autocorrelation coming into the flows in the direction that you're expecting, then you take the trade. Right? So you're predicting the flows, you need a little bit of confirmation and then go. Probably today when I started to see, because I was saying I preferred long, right? But I was really risk adverse off of it, but probably that was a situation where I should have done it. Or as soon as I heard that it was the oil thing, I should have tried going long. I guess I did on a sim count, but I was too pansy to try and make money off of it. I wonder though, if I had taken it over here, if, like, let's say I got 3.8, would I have taken it off at 3.7? I don't think I would have. So is the flow chart of what you're saying news, then flow, then trade? Yeah, I think so. Well, I don't like to use the word news because it's so much more than just news, right? There are things that are purely technical that can predict orders, but so the technical term that we use is predictors of order flow. Predictors of order flow, confirmation in the flow, then execute, right? And there's things that we can do at the execution stage too, right? Like if you've seen the whole order flow series, then like the second video is like the one where we talk about that actual execution. If I can take it as she goes, or if I can catch it on an iceberg, that's to my advantage if everything else is correct. So there is edge in those things. It used to be that you could make money just from those things. Now there's too much competition, but if you're informed, you have informed trading behind that too, then those end up being really useful. That's also why I was doing those things like, oh, okay, well, there's this big order here. If it clears, I'm going to put a stop limit on it, right? This is like, okay, I know that the flow is long. I'm getting that confirmation now. I don't know if we're going to go through this level, but if we do go through this level, I can try and hit it as she goes and probably take a tick or two. Risk-free trade. Or like if I really felt strongly long, hey, 1,000 lot on both sides. It's a good place to get. Like I think that I would, or if I was trying to sell it, I would probably be trying to get 19.5. I sit in that queue, I'm going to get filled. Yeah. Why hit into 19? You can get filled 19.5. Are there funds that automate that process already? Is it a discretionary process? So I think that a lot of the hedge funds that are really successful, that is what they're doing, yes. And can it be automated? Probably to a large extent, yes. But that would be a process that would require a lot of, probably something too difficult to do on your own. Because you're talking about writing like 20 different models about how certain types of flows tend to go, and then combining it all together into one thing, right? It can certainly be done, but that's a lot of work, and I don't have, you know, that's the thing is as also I think that a lot of the data that they're getting that kind of information from comes like for Goldman Sachs, right? Remember when we were reading that and they were saying, well, it doesn't look like there's a whole lot of end of month rebalancing flows this time. How do they know that? How do they determine that? I have no clue. I don't think that it's just from where the S&P 500 went. They have to know somehow how much money is actually coming into those funds. So there must be some proprietary data that I don't have access to that helps them make that model. You know what I mean? So that's why for us it becomes discretionary. And then even if you had all of that stuff, there's still like the breaking news part, right? Because you as a human are going to be able to figure out what that means a lot better. Robots are kind of doing it, but they screw up a lot. What their clients are saying, probably. Yeah, I think that might be a big portion of it, yeah. Because they can see what all of their clients are and they can categorize their clients by what strategies they're using and what type of fund they are. They can better predict what it's going to be. Yeah. Because that's totally what those traders are doing, right? Is they're trying to predict what their clients are going to do. And so that they can be ready and have it bought before the client even calls them up, you know? Oh yeah, you need XYZ? Yeah, we already got some of that. I'll give it to you right now. Done. Instead of having to go, oh, well, I don't have any. Okay, you're going to buy. This is how much it's going to cost. And it's going to be this much above the market price. They're not going to like that, right? So they hedge their clients. Yeah, there you go. All right. Well, that was the bell for me. Did see that they fell down a little bit, so I am still kind of eyeing 3.8. 3.8 seems to be kind of like the key price that they keep, you know, like on a multi-day basis. So we've spent a lot of time there. And it does look like oil has slowed down. Good session. Yeah, I think we did have a good session. All right, but I'm going to get going. I will see you guys tomorrow. And in the meantime, stay excellent.